Hello everyone, welcome back to the channel. Today we are going to talk about a topic that many people care about deeply but often postpone until it feels urgent, which is protecting assets for your family. This is not about becoming rich overnight, and it is not about complicated legal tricks. This is about making sure that the money, property, and resources you work so hard for will truly benefit the people you love, even when life does not go according to plan. Many people believe that asset protection is only for the very wealthy, or that it can be done later when they are older. The truth is, asset protection is relevant the moment you start earning income, buying property, or having dependents. Once you have a spouse, children, or parents relying on you, the question is no longer how much you earn, but how well you protect what you already have. Let us start with the most important mindset shift. Asset protection is not about avoiding responsibility or hiding money. It is about planning for risks that are very real. Illness, accidents, job loss, lawsuits, business failure, and even sudden death are uncomfortable topics, but ignoring them does not make them disappear. Proper planning allows your family to continue living with dignity and stability, even during difficult times. The first layer of protecting assets for your family is cash flow protection. Many families focus only on assets like houses and investments, but forget that monthly cash flow is what keeps daily life running. If your income suddenly stops, savings can disappear very quickly. This is why an emergency fund is not optional. Ideally, a family should have at least 6 months of basic expenses in easily accessible cash. This money is not for investment, not for returns, and not for lifestyle upgrades. It is purely a safety buffer so your family does not panic or make bad decisions when something unexpected happens. Next comes insurance, which is one of the most misunderstood tools in asset protection. Insurance is not an investment, and it is not meant to make you rich. Insurance exists to prevent one bad event from wiping out years or decades of savings. Medical insurance protects your cash and investments from being drained by hospital bills. Critical illness insurance provides lump sum cash when income may stop but expenses continue. Life insurance ensures that if you are no longer around, your family still has financial support to pay for daily living, education, loans, and long-term needs. When choosing insurance, the goal is adequacy, not excess. Too little coverage exposes your family to risk, while too much coverage strains your monthly cash flow. The key question to ask is simple. If something happens to you, how many years can your family survive financially without your income? Insurance should cover that gap, not more and not less. Property is often the largest asset a family owns, and it requires careful planning. Many people assume that buying property automatically means security. In reality, property can either protect your family or burden them, depending on how it is structured. High loans, poor rental yield, and lack of insurance can turn property into a liability. To protect your family, property loans should be affordable even during income disruption. Mortgage insurance or sufficient life coverage should exist so that the property does not become a forced sale in an emergency. Ownership structure also matters. For family homes, clarity is critical. Who owns the property, what happens if one owner passes away, and whether there is a will that clearly states intentions. Without proper planning, property can become the source of family disputes rather than security. Clear documentation protects relationships as much as it protects assets. One of the most overlooked aspects of asset protection is having a proper will. Many people delay writing a will because they feel it is too early, too complicated, or unlucky to talk about. The reality is, a will is an act of responsibility and love. Without a will, your assets are distributed according to default laws, which may not reflect your wishes and may take a long time to process. During that time, your family may struggle to access funds they urgently need. A will written will clearly state who receives what, who manages assets for young children, and who is responsible for executing your wishes. It reduces uncertainty, delays, and emotional stress for your loved ones. Writing a will is not about expecting the worst. It is about preparing for life responsibly. Trust planning is another layer for those with more complex assets or business interests. A trust can protect assets from misuse, ensure long-term support for children, and provide structure for wealth to be managed across generations. Trusts are especially useful if you have young children, special needs dependents, or significant business assets. While not everyone needs a trust, understanding when it is appropriate can prevent future problems. Business owners face additional asset protection challenges. Mixing personal and business finances is one of the biggest mistakes entrepreneurs make. If a business faces legal issues or financial failure, personal assets can be exposed if structures are not set up properly. Separating personal and business accounts, having proper agreements, and maintaining clear records are simple but powerful ways to protect family assets from business risks. Another important topic is debt management. Not all debt is bad, but unmanaged debt is dangerous. High-interest consumer debt drains cash flow and increases vulnerability during crises. Protecting assets means reducing unnecessary debt and ensuring that existing loans are manageable. A family with lower debt has more flexibility, more peace of mind, and more options when life throws challenges their way. Asset protection is also about behavior and discipline. Lifestyle inflation is one of the biggest silent threats to family security. When income increases, expenses often increase faster. This leaves families exposed despite earning more. A protected family maintains a gap between income and expenses and consistently saves and invests the surplus. This habit creates resilience over time. Let us also talk about communication, which is often ignored in financial planning. Protecting assets is not just about documents and accounts. Your spouse should know where important documents are kept, how accounts are structured, and who to contact in an emergency. Silence creates confusion. Clarity creates security. Having honest conversations about money, responsibilities, and plans strengthens the family's ability to handle crises together. Finally, remember that asset protection is not a one-time task. Life changes. Income changes. Children grow. Laws change. Your asset protection plan should be reviewed regularly, especially after major life events such as marriage, having children, buying property, or starting a business. Small updates over time prevent big problems later. To conclude, protecting assets for your family is not about fear. It is about foresight. It is about making sure that your hard work continues to support the people you love, even when you cannot be there in the same way. True financial success is not measured only by how much you accumulate, but by how well you protect and pass on what you have built. If you found this video helpful, feel free to share it with someone who might need to hear this message. Leave a comment below if you want deeper discussions on wills, insurance planning, or family financial strategies. Thank you for watching, and I will see you in the next video.